Hi, this is Brennan Decima, owner of Decima Wealth Consulting. We're going to talk a little bit about disability planning for our loved ones. So, if you have a loved one that you're supporting, a child or a family member with disabilities, it's not just about saving money, but it is about protecting them. And there's a couple strategies a lot of my clients that are in that position use that hopefully is helpful for you. First and foremost, special needs trust is absolutely critical. And the reason for that is there are a lot of government aid programs. So if you pass away and leave money outright, well meaning, but it could potentially limit their eligibility for the aid that they're getting. So a special needs trust, if properly written, can allow you to leave money behind to support their care once you're gone, but still preserve those eligibility limits. Now, if you are funding that special needs trust when you pass, it is an irrevocable trust. So irrevocable trusts have a different tax structure. So general rule of thumb, not exact, but if the trust is producing income more than $15,000 a year, you're now in that highest tax bracket, that 37%. So special needs trust, it's really, really important to know what investments are more tax friendly and tax efficient. So lower income producing options typically make more sense in irrevocable trust. This would apply to the special needs trust. Now, if we want income producing investments, we want higher interest or more conservative options or higher dividend payers. Another tool that my clients pair it with is if your loved one was disabled before the age of 26, they're eligible for an ABLE account. Now, an ABLE account is something that basically becomes a Roth, but isn't dependent on earned income. So you can contribute up to the annual gift limit. So 2025, you can put in $19,000. But if that ABLE account stays below $100,000, it is not included in the Medicaid eligibility. So you can remove $100,000 from the irrevocable trust, and now you've created a Roth. So all the dividends, all the interest are tax-free as long as it goes to qualified expenses. So an ABLE account is a really powerful tool to pair with a special needs trust if you have someone that their disability, they've had it their whole life or they were diagnosed before 26. And then the final one is just really simple but powerful, but it's a letter of intent. So you may be the one giving the instructions currently to caregivers, and you're their advocate, you're there for them. Well, if you're no longer there, who's going to be the advocate? So writing detailed instructions for caregivers or other family members that may be getting more involved can really make sure that your loved one gets that message across and is properly cared for. So if this is helpful, please subscribe or message me in the comments if you would like a checklist, and certainly appreciate your time.